To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello everyone. I hope you all are doing really well because at this point of time, I am very sure that you all must be completely engrossed in your preparation for the coming examination. At this point in time, the only duty that you all have is to study all the time and to prepare really well for the coming examination. In this session, we are going to have the discussion of the RTP which has been released by the Institute for the upcoming examination, that is November 22. There is something very important that I wanted to share with all of you. I know you all are having a very little time to go through all the webinars and all the other activities conducted by the Institute, but obviously why we teachers are for, to make that work easy for you. So the webinar which was conducted recently by the Institute, which was basically focusing on your upcoming examination, highlighted some very important points which would definitely help you for the preparation. These will definitely help you score very well in your coming exams. First, the Institute has very clearly focused and told about students lacking the practice in writing, because of which there are silly mistakes done by them, because of which they are lacking in time management, and obviously theory papers, if you absolutely do not practice, then trust me, in the examination your hands will freeze. So because of which I really want all of you to understand the pointer that whatever you study, make it a point that at least a part of it you write it. It is impossible like schooling to practice everything in writing. That we are not going to do, but definitely yes, we need to have some practice when it comes to theory papers. Second important point the Institute highlighted was with regard to the conceptual clarity. We have seen in the recent times that the papers have become more practical oriented, more concepts are tested by applying them, the questions are based on the application, because of which it becomes very important for the student not only to mug up the definitions, mug up the provisions, that will not help. Because of which it becomes very important for all of you to not study just the overviewing of it. That should not happen. You have to actually get into in-depth understanding and realize you are in a professional course, because of which conceptual clarity has to happen. The Institute has been increasing the level of the setting of questions because they want to test you on the application skills, and therefore you have to parallelly also improvise yourself, because of which you have to get in-depth knowledge of whatever you are studying. Clear? Then, one important point which was focused for theory papers and precisely for a paper like auditing was that students are lacking interpretation skills. That means you are not able to understand the question correctly. The question asks you something and you are giving some other answer. Here understand the key to success is reading the correct question in the correct direction, in the correct sense. Because most of the times you know the concept, you understand things very well, but because of the hurry or because of the kind of the fear that you have in you, the anxiety that you have developed, you will read the question quite fast with a view of finishing it, and you will end up reading the question wrongly. Don't just read one or two words in the question and come to a decision. Precisely the examples were given like for analytical procedures. Only by reading analytical word, do not start writing an answer to it. Look exactly to what the intention of the examiner is. Understand what is the question. Do not give generalized answer for anything. One more important point that they focused about was regarding the standards. So you have to understand standards when you write about. Look at the question very clearly. What exactly from the standard is being questioned? Usually, students are giving a generalized answer. And generalized answer just to give an overview of the entire standard in any question of that standard will not be correct. So, in any question of, for example, if a 580 question comes about written representation, you simply cannot write anything and everything of SA 580. You have to understand what clearly is the question of 580. Based on that, you have to frame an answer. So, overgeneralizing any answer just to write everything that you know about that standard will definitely not give you marks. So, you have to be very particular in deciding what you have to write. So, the interpretation skill has to be very well clear, and writing practice is a must. If you do not practice writing, Trust me, I'm repeatedly telling this. In the exam, you will not be able to come out of the situation where you can read the question and actually start writing. Your hand will actually freeze and you will not be able to start it. Okay? And in a paper like audit, where the language plays a very important role, you have to understand that only speaking to yourself every time, only reading the answers will not help. You have to have the interpretation skills with you. Got it? So because of which, see that all these pointers which have been highlighted by the institute, you have to actually take into consideration. This will definitely help you success. One very disappointing point which they highlighted was that in the examinations, the pass percentage for the audit paper is 11%. So understand that is really low. Okay? That means out of 100, only 11%, there is only 11 people pass in audit, which is like really bad. And the reason behind it is all of that the language becomes quite difficult because they try to mug up. Concepts not clear. They are studying only like for the sake of it, that means they are not getting into detailing of it. They are generalizing the standards, not getting the exact pointers behind it. Because of all this, there is a lack of preparation. And because of which, I really thought I should share all of this with you. Because in the examination, and you're at the verge of writing the examination, keep all these pointers in your mind. Even if you are preparing in the right direction, even then if you have missed out any of the points which I've highlighted now, see that you take into consideration and prepare accordingly. I guarantee these pointers will definitely help you to score much better than what you are actually planned. Never study anything only for the sake of reading it and just trying to mug up the points. We are not in school. We are not doing something only once and it's done. Whatever we study is for the professional course that we are seeking, for the practice that we are going to have in our future. For this, nothing can be volatile, nothing can be temporary. It has to have a long memory that we have, and because of which we have to study everything conceptually so that it is actually instilling in us properly. We cannot afford to learn today and forget tomorrow. All of this is going to be very important. So let us get into the root and understand the subject properly. Only then you'll be able to fare in the examination really well. Alright? Now, one very good news for all of you is that no academic updates, that is no amendments for this coming examination. In fact, when you read the RTP, you would be seeing two questions, one coming from the share capital, other coming from the company audit. But these are not the new amendments, they are from the previous examination only or the previous attempt only. Only thing is, the institute material has not got updated here in this particular regard, and that is the reason it is appearing in the RTP. And the institute makes it very clear by highlighting the pointer that these have not been updated in the institute material, because of which these sections we have to study from the RTP, which has been released, and not take it from the printed material which is available. Got it? So with this, let us get started understanding the RTP in detail. One more point before I begin. Please do not skip for any subject whatsoever the completion of the RTP. Okay? And also one request, do not jump to the RTP without finishing your first completion of your syllabus. Why? Because this RTP when you do, you have questions coming from every topic, and when you read the questions and try to analyze and interpret them, you will be able to decide where exactly you are standing and what is going to be the level of your preparation. So I would sincerely recommend everybody that you have to finish the syllabus and then jump on to the RTP. Alright? This will help you guide, okay, with your understanding, and also you will clearly get an idea, are you really preparing or are you prepared for the upcoming examination? It is a revision test paper. Cannot happen without the completion of the syllabus. Got it? And one more important point for the RTP, which I call it to be like a bonus. Sometimes, if your luck is really good, you have direct questions coming from the RTP in the main exam. But that we can't guarantee. But you never know, if your luck is really good, you could have questions directly coming from the RTP. So I highly recommend that you do not skip the preparation of your study along with the RTP taken together. So let us begin with the discussion. So I have the institute released RTP with me, which we are going to discuss now in detail. Okay, so first one. First, they have given you the academic update, and as I told you, it is not something really new for all of you. If you have studied the updated materials, okay, for the upcoming examination, then these will already be there with you. Okay, so these are all the amendments already happened earlier. So it's not something new, but only because it has not been given or updated in the printed material of the institute, they have given it again in the RTP. If you see here, they have clearly written, they are not from the printed copy. Students are advised to study this topic from here and not from the printed copy of the study material. That is the only reason. So we have section 53, okay, which is talking about issue of shares at discount. So we know the companies are not allowed to issue their shares at discount except for section 54 where sweat equity shares are allowed. So here there was a change in the punishment where the imprisonment was eliminated. Okay, so that was already taken into care in the previous update that we had. Along with that, in the company audit regarding the penalty provisions, okay, punishment for non-compliance, there were quite a lot of insertions which happened in the previous examination. So it was regarding both, one is the company will be punished and one is the auditors. Okay, so company, we have studied about the fine which will not be less than 25,000 but it will extend to 5 lakhs and every officer in default. Here also the imprisonment provisions have been removed. And when it comes to auditor, it was section earlier 139, 143, 144 and 145 which they eliminated 143. So here is the updated version 139, 144 and 145. Along with that, there have been introduction of the new parts where this part was earlier not there. That is 25 lakhs or 8 times the remuneration. So that also has been included. Alright. But this would definitely not be something new to you because it already was discussed in the earlier examination. So because this was not updated in the institute study material, it has come back again. So nothing new here. Okay. And one more point which they had added was when it comes to fines, all the partners will be jointly and severally liable if it is an audit firm. But when it comes to imprisonment, then only those partners which are actually guilty would be imprisoned. Okay. So that was the pointer taken here. So these are the only two academic updates given. Quite simple. One is section 53 about the shares at discount and one is company audits. We have section 147 which talks about the punishment for the company for non-compliance of 139 to 146, both inclusive. And for auditor, it is section 139, 144 and 145. If these are not complied, what punishment the auditor will have. Okay. So you have to just go through these and there are no other academic updates which are available for you. Alright. So it's quite a good time. Okay. No much changes. So quite simplified. Okay. So let us now get on with the questions. What I will be doing is, I will be giving you the synopsis of the entire case study. Then we'll take up the questions in detail for our discussion. So let us now take up the questions which have appeared in the RTP. The first one is a case scenario given to us. Here I will be giving you the synopsis of the entire case study and then we'll directly take up the questions. As we do the questions, we'll go back to the case study and we'll see from where you could get the answer for it. So basically here they are talking about a particular company which is a listed company and they are into the fitness business, and Sam and company are the chartered accountants. They have gone with a team of 8 members to this particular organization for doing the audit. One of them is an fresher, a new article, who is not aware about certain terms. One of the terms that he is confused about is pervasive. So one of the engagement partner has explained to him what is the meaning of the word pervasive. Alright. Along with that, they have also told about two members of the team having a kind of discussion regarding one person believing that they have obtained sufficient appropriate evidence to come to a conclusion that financial statements are free from material misstatement. On the contrary, the other person is disagreeing. They have a lot of discussions and meetings conducted. Finally, they come to a conclusion. Alright, and they end up with a true and fair view, unmodified opinion. Alright, then with their discussions, they also realize that there is something which they believe to be very important. There is some uncertainty which they have come across, but this has already been disclosed in the financial statement. But the auditor believes this has to be informed to the users of the financial statement. It is fundamental for their understanding. Along with that, they are also talking about some comparative or corresponding figures which they have come across. Alright. So now, keeping all this in mind, let us take up the questions. First question. CAK explained to Mr. N the pervasive effect of the financial statement in the auditor's judgment. which of the following combination best answers as explained by CAK? So here if you look on top, they have given you that when this articled clerk, the fresher, had questioned about the meaning of pervasive effect, the answer given to him was, pervasive effect on the financial statement are those that in the auditor's judgment are not confined to specific element, accounts or items. If so confined, they could represent substantial proportion. In relation to disclosures, they are fundamental to the user's understanding of the financial statement. Last, are confined to specific element, account or items. Correct? So these are the 4 things given. Now we have studied about this and you all must have already known that pervasive effect is something which you cannot confine to a particular element. Even if you are confining somewhere, it is covering a substantial portion. And when in notes to account you call something to be pervasive, it is such that that disclosure is fundamental to the user. Got it? So here the best combination will be 1, 2 and 3. 4th is not, because basically 4th is not a pervasive effect. Okay? Because you are very clearly giving an indication to where the misstatement is. So when you can locate it, it is not going to be something which is pervasive. So the answer to this would be D. That is 1, 2 and 3. Second question is that in this question, in the case study, they have told that they have already used the phrase in their audit report that in our opinion, the accompanying financial statements give a true and fair view in accordance with the applicable financial reporting framework. Now the question to us is, what other alternative would be the language that we could use? First, they are using the word give a true and correct view. Wrong. Present correctly. Again wrong. Present fairly. Correct in all the material respects. So that's acceptable. Last, give a correct and fair view. Absolutely wrong. So here the correct answer would be C. Then third question is, which of the following statement is not included in the section with the heading basis for opinion paragraph? So we know as per SA 700, we have studied about the content of the auditor's report. So we know after the opinion paragraph, we have to include the basis for opinion. And where the content is very clearly given in the standard, what should it be? So here, which of the 4 is not a part of that particular section or the paragraph? Audit was conducted in accordance with accounting standards. Absolutely wrong, because we use standards in auditing. So I guess this is the answer, because obviously this is not to be included. The remaining, yes, it talks about fulfilling all the ethical requirements. Correct. You give a description of the auditor's responsibility and also tell whether you have obtained sufficient appropriate evidences on which you are going to base your conclusion. So these 3 pointers are correct. So the answer is A. Then I told you there is something that they have found out and which the auditor believes it is disclosed appropriately in the financial statement, but according to him, he wants to disclose it to the users because he believes it to be fundamental. So this we study as a part of SA 706, which talks about emphasis of matter paragraph, and therefore the paragraph to be included in this audit report by the auditor would be emphasis of matter. Then we have about the corresponding figures which are referred to in the question. So if you read very carefully, it is giving an indication of SA 710, which is talking about the prior period financial statements which have not been audited. Then you're going to give a reference in your audit report. So the answer to that would be the 4th one. Okay. So this case study, very simple. You have to only understand the concepts very, very clearly. Then you have the case study 2. Again, I'll give you in the synopsis manner of what it is talking. It is purely focused on bank audit. Here the auditors are ABC and Associates. They go to the audit, okay, and the engagement team, entire team has come across various things while checking advances, while checking the NPAs, while categorizing the amounts in advances into standard, substandard, etc. So whatever they have done, the questions are based on checking whether what they have done is appropriate or not. So before you solve the question, I would recommend you should read line by line properly everything in detail. Okay, when you solve it, I'm just giving you the summary kind of it so that we could attempt the questions easily. So here, the first question that they ask us is, what are the subcategories of the special mention accounts? So just to give you an indication of what is special mention accounts, these are the accounts which are warranty signals or like a warranty or a warning, not a warranty rather, warning given to the bank that look, these are going to get converted into NPA. So before that only, before they get converted into NPA, you get a warning. so that you could take preventive actions to not make them turn into NPA. So those we categorize to be special mention accounts. Okay. So out of the norms that we have, which of the four actually gives the correct categorization? First, SMA 0 talks about accounts showing stress signals, correct. 1, overdue between 31 to 60, that also is correct. And SMA 2, overdue between 61 and 90. So the answer here is A, because all these three categorizations are correct. Other three, if you look at, they're all wrong. Okay. So because accounts not yet due for payment, no. Stress signals is compulsory. Then 0 to 45 we don't categorize as SMA 1, so that's wrong there. Yes. So C and D becomes wrong at SMA 0 only. So the answer to this is the first one. The special mention account, you have a proper categorization done. So the first straight question, even if you have not read the case study for this, it's quite simple that you can answer this. Then creation of security of Aquabras Private Limited and Prism Works was in the form of what? So for this you have to go to the case study and you have to have a quick glance of it. Okay. Mr. R, on being instructed by CAQ, verified the securities offered by the borrowers for the bank finance. For a particular customer named Aquabras Private Limited, the security was in the form of delivery of the goods with the intention of creating a charge thereon. Then the legal ownership of the goods remained with Aquabras. Okay. In case of another customer, Prism Works, there was a transfer of title, there was a transfer of life insurance policy in the favor of bank. So quite simple. One is Aquabras was transferring the goods, so the delivery of the goods is happening, but the ownership is with Aquabras. So it is simple concept of pledge, movable goods. So creating a charge by keeping the ownership with you. Second, there is a right which you have, which you are transferring to the banker. So simple, we call it to be what? Assignment. So the security given is in the form of a pledge when it comes to Aquabras and assignment when it comes to Prism Works. So the answer is pledge and assignment. Correct? Then, in your opinion, is trustworthy a standard asset or a substandard asset? So where do we have trustworthy? Okay. While checking the classification of NPA, Mr. P came across a customer named Trustworthy whose term loan installment was overdue for 90 days at the year end, but is 100% secured against the office building. The same was classified as substandard. It's wrong because it's not overdue for more than 90 days. Okay, so here we cannot say, and security really doesn't matter here. If you look at the solution, though it is due for 90 days, it is 100% secured, so it is standard asset. To classify, we will not give in regard to security here. Since it is due for 90 days, it is substandard, irrespective of security, wrong. Since it is not due for more than 90 days, it is standard asset, irrespective of the security, correct. So to check for the security, when it is standard asset, you don't give importance to the security. Alright, so that's not going to happen. So since it is not due for more than 90 days, it is standard asset, irrespective of the security. The answer is C here. Then, is Super 40 correctly classified as standard asset? Where is Super 40 given to you? Alright. There was another customer named Super 40 who has a cash credit account and a term loan with the bank. So, cash credit and term loan. Super 40 has been paying the installment on the term loan as well as on the interest on the cash credit account regularly, and there was no overdue amount. Mr. P verified the drawing power of Super 40 and found it to be less than the sanction limit throughout the year. The outstanding balance of Super 40 during the whole year exceeded the borrowing power, but was less than the sanction limit. Both the advances to Super 40 were classified as standard advance since the recoveries were regular and outstanding balance in the cash credit was less than the sanction limit. So understand here, first of all, they are telling it is exceeding the drawing power. So when something is exceeding the drawing power, it cannot be a standard asset. And whenever you categorize a particular asset into a standard or a substandard asset, it is going to be borrower wise and not the facility wise. So borrower, one of the facility extended to him becomes a substandard asset, everything else also would become. Alright. So if you talk about it like that, so if you look at it, is Super 40 correctly classified as standard? First of all, the answer is no. So first one is A is cancelled, D also goes as elimination. Look at B. No, since the outstanding balance of the cash credit exceeds the borrowing power for more than 90 days. So both the advances, that is term loan and cash credit, shall be classified as NPA. Correct. No, since the outstanding balance of the cash credit facility borrowing for more than 90 days, the cash credit facility will be classified as NPA and the term loan as standard. This cannot happen because you always do it borrower wise and not the facility wise. So if super 40, one of the particular asset becomes NPA, everything that you have to become NPA. So we know it is going to be the borrower wise and not the facility wise. So one particular facility becomes NPA, it's going to be all. So the answer to that is going to be B. Which among the following is a non-funded loan? Undoubtedly letter of credit. Alright, then. Let's take the general MCQs. As per SA 210, preconditions for an audit do not include which of the following? Okay. Acceptability of the financial reporting framework, it includes. Responsibility of management regarding preparation includes. Making available records to the auditor, very much yes. Integrity of KMP, no. So the answer is D. An auditor signs a false audit report knowingly. Which of the following fundamental principles of professional ethics is violated in such case? So objectivity, no. Integrity, obviously. Okay, because he's done something which is wrong, dishonestly. So it is going to hamper the integrity. If you take up the next one, which of the following statement is most appropriate? Okay, so you have to read the question correctly. Most appropriate. First, audit program is a detailed plan of audit strategy. Okay. Audit program cannot be reviewed. False. Audit program is a detailed plan of applying audit procedures. Correct. Audit program is relevant for year for which it is prepared. It is useless for the subsequent year. No. In fact, audit program will serve as a guiding principle for the next year in case of recurring audit. Correct. So the answer to this would be most appropriate is C. Understand, even A is quite a bit correct, but they are asking you the question as most appropriate. So obviously the most appropriate here would be audit program is a detailed plan of applying the audit procedures. Next, a company is engaged in the business of obtaining eggs from 1-day-old chicks. Which of the following is not an example of an event or condition that may cast a doubt on the entity's ability to continue as going concern? So indicated to SA 570. So which of these would say that the going concern assumption would get affected? Would not affect. Okay, so they are not an example. Mortality of 90% of the livestock, it is going to affect the going concern. Decision by the government to ban commercial rearing of the birds, business only will collapse, so it is an indicator. Shifting of farm labor to respective villages due to MGN REGA, that is Mahatma Gandhi scheme which is there by the government. So that also will definitely affect. Increase in the cost of feed of chicks by 20%, that is very normal. So there is going to be inflation, there is going to be increase in the costing. So that is not going to say that it is an indicator that you will not be a going concern. No. So the answer is D. Letters of credit and foreign bills purchased and discounted are the examples of respectively what? See here, if you understand letter of credit, already we discussed in the previous question. Okay, so it is non-funded. Okay, and foreign bill purchase is funded. So the answer would be non-funded facility and funded facility. So the answer will be B. So this question is same here. Okay, somewhere we just now got through it. Non-funded letter of credit. So an interesting part here, we see that it is kind of repeated. So non-funded letter of credit, that is first pointer, and foreign bills purchased and discounted are funded. Okay. So now let us take up the descriptive questions. First one is about true or false, and always remember, you just cannot give an answer true or false. Justification for the same has to be given. So here I'll give you an overview, we'll discuss it, but please go through the way the answers are given, because that is the real way in which you write the answers in the examination. Clear? The first one, the level of sampling risk that the auditor is willing to accept will not affect the sample size. False. In fact, lower the sample risk. If you want, you should use larger sample size. Correct? So because of which the statement is wrong. Okay, 530 discusses about this very clearly and tells if you want to reduce the sampling risk, larger sample size would be required. There is no difference between audit and review. Wrong. Audit is, we know we do it for obtaining reasonable assurance, correct? But review is a limited assurance for the engagement, okay? That is, whatever audit has been performed, there is a limited assurance review that you conduct, correct? So these are two different terms. We cannot interchangeably use it. Audit is different. Review is going to be a limited review that we are going to conduct. Alright, then. Negative assertions encountered in the financial statement may be expressed or implied. Negative assertions, that means something which is not present. Okay, they could be what? Expressed as well as implied. Expressed is you clearly give it, like for example, there are no contingent liabilities. So you are very clearly telling, the management tells we don't have any contingent liabilities. So they're expressed. But don't you have implied also? Yes. Because suppose in the balance sheet if there is no building, it is assumed what? That there is no building that they are having. So it is a negative assertion? Yes. And it is implied. So there is both implied as well as expressed. Development of the audit plan is important before the establishment of the overall audit strategy to address the various matters. Wrong. The always procedure will be, first we'll have overall audit strategy and then you'll have the audit plan. In fact, audit plan will be coming from the overall strategy that you have made. Okay, so first we always develop the strategy and then we have the planning. 300 very clearly talks about it. An unexplained decrease in the GP ratio may result due to fictitious sales. Fictitious sales are fake sales, dummy sales. So when you're going to increase sales, profit will increase or decrease? It will increase. So there has to be increase in the GP ratio. So this also is going to be false. So once again, there is no difference. This is false. Negative assertions can be both. Yes, true. This is false. This also is false. Then the auditor has to report on the matter specified in section 143(1) of the Companies Act 2013. It is false. You will report only after you do the inquiries and any of the answer to your inquiry if you get negative. If you are getting adverse answer to any of the question which you are raising, only then you are going to bring it in the audit report. If the answers are satisfactory and there is no doubt in it and you are satisfied, there is no misstatement, you don't include it as a part of your reporting. So every matter will not come definitely. Then there is an inverse relationship between detection risk and the combined level of risk of material misstatement that is inherent in control. Very true it is. Okay. So risk of material misstatement and detection risk, they are inversely related. True. For the auditor's opinion, reasonable assurance is an absolute level of assurance. Absolutely wrong. Okay. Otherwise you would have never called reasonable, you would have called true and correct to be. We give true and fair because we can obtain only reasonable assurance, which is not going to be absolute, but yes, definitely will expect high level of assurance. So this is also false, incorrect. Okay.